Palantir has been incredible. I'm glad you're picking this one. Palantir up 60% from the recent low 3 weeks ago. So I'm glad you're choosing this one. What do you see on this?
Yeah, look at that. Wow, up 60. You kind of lose perception sometimes, but wow, that's up 60% in 3 weeks. I mean, that's like, a great year's return. It's a phenomenal year's return. But anyway, again, right, just like we saw in the
And real
ETFs.
quick, let me just jump in here real quick, because one of the things that I've been saying consistently on this show is that I've been waiting for a pullback to 60 on Palantir, and we never really got it. So for all of you that were kind of waiting out that price level with me, I'm sorry. We weren't able to get you in for this run, but this is the type of thing that I was hoping if it came into that price level. So just as an aside, a little bit of a mea culpa here, Mark, because I was saying I think that this is going to come in a little bit, and it hasn't. So.
Well, that's okay, man. Trading is not about being precise. It's about making money. And ultimately, that's what we want to do, right? It's like going back to golf, right? It's like you're not going to birdie every hole. And if you're me, you're probably going to go months without birdieing a hole.
I feel that, my man. I just had one last Friday, so I'm feeling pretty good right now.
Sweet, man. All right. So just a couple of things here. What we saw in the ETFs is the sell-off didn't end down around here just by random coincidence. The sell-off ended here because it was a bottom back here. And people that bought or people that sold back here watched for months and months and months. And when it finally got back to their level, they're like, all right, I'm going to buy my shares back. So I just wanted to point that out. But now this is what we would call a breakout. Or, I mean, it looks to me like a breakout. And trading breakouts is it's a pretty common style. And we can see here, we rallied up to here and we got resistance, right? So a lot of times when you get to resistance, you sell off. And this is because some of the people that want to sell, they start to worry they're going to miss out. They know that the buyers are going to go to whoever is willing to sell at the lowest price. So someone might be at like 97 and they might say, you know what? I'm going to go down to 96.5 because I want the sellers to come to me. I'll trade a half a point in exchange for getting my trade executed. Someone else is like, oh, that person's there. I'm going to go down to 96. Mm-hmm. And you get a snowball effect and you sell off. And the same thing happened here. Now, why do we get resistance here? Well, there are people that bought at the peak here that regretted doing so when the price went lower. And a lot of them say, if it gets back to my level, I'm going to get out of break even. So buyer's remorse, just like we saw, it can turn support into resistance. It could also keep resistance intact. Now we got above this, and traders would say that this is a breakout. And it's really not just a symbolic term. It could tell us that the people that created the resistance with their sell orders, whether they're investors or traders, are out of the way. Maybe they cancel their orders. Mm-hmm. Maybe they finish their orders. But regardless, they're out of the market. And when you take a lot of supply or sell orders out of a market, the demand side or the people that want to buy have to sometimes start jacking the price up to draw the sellers back in if they want to get executed. I mean, they might come in when the market's at 103 and say, hey, I'll buy all the shares you want to sell me at 103. And someone might say, well, I'll sell it to you, but it's going to be at 104. There's no other sellers around. I'm the lowest price in town. So take it or leave it. So now the next obvious thing would be like, all right, if this is breaking out and we talked about how the market is firming up, and if the S&P can take out that level, this is going to continue to move higher. And so the next answer, or I guess question I should say, is where would I consider selling? And just like there was resistance at a former peak down here, there's a good chance if we get up to this former peak around 124, there's going to be resistance there again. So from a trading point of view, you could say, all right, I'm buying the breakout. This is my selling target. And then we just think about our stop loss order and our trailing stop order. And, I talk to a lot of people, a lot of retail traders. I have a lot of students, and so many people have gotten really, really hurt over the past couple months. And a big part of it is because they just didn't think about having stop out strategies. And a stop out strategy basically means like, all right, let's just say, for example, you bought this, just to make the math easy, at 100. Now it's at 108. So you're up 7 points. You could say, all right, I'm up 8 points or whatever. I bought it at 100. Now it's at 108. I'm up 8 points. If it reverses and gets to 105, I'm going to sell it. And I have a 5 point profit. Let's just say it gets up to 115. You could say, all right, if it reverses by 5 points and gets to 10, I'm going to sell it. Now, let's say it gets to 120. You can say, all right, if it reverses by 5 points, I'm going to sell it. So you move your trailing stop up along with it. And the idea is that if you have a profit and you have a trailing stop, you're not going to sell it at the exact top. But if it does reverse, you're going to keep some of your profit on the table. So people generally use trailing stops by percentages. If it reverses by X percent, I'm going to sell. Sometimes people use points. Sometimes people use like a trend line. All right, I'm going to stay in Palantir as long as it's above this trend line. If it breaks the trend, I'm out. And yeah, so when you get into a trade, you need to know how you're going to get out. You should have an exit strategy. Right. You should think about where will I get out of this for a profit? Where will my initial stop out be for a loss? What kind of trailing stop am I going to use?